This is your LMAX Exchange technical update for Friday, August 11th, 2017. Eurodollar. So the market has been consolidating a recent bout of declines off that 2017 and plus 2.5-year high at 1911 from the other week. There is still a risk that this consolidation results in a bearish breakdown with more room for correction off the recent highs, potentially back down towards the 50-day SMA in the 114s before the market considers a fresh higher low and resumption of this intense uptrend that we've seen in 2017. At the same time, if the market refuses to break down from here and we do see a push back towards and above 119.11, that recent high, it seems that given the extended weekly studies that additional upside should still be limited in favor of a more significant downside correction towards that 50-day moving average before we do see a more significant resumption of this uptrend well above 120. So again, right now, the consolidation that we're seeing could be a bearish consolidation ahead of the next major downside extension for this correction to play out, potentially back into the 114 area in anticipation of, at that point, a fresh higher low. Sterling dollar. So cable has been in the process of pulling back quite a bit from the 2017 high that we had seen in the previous week, and there is still room for this market to pull back some more towards that previous resistance now turned support in the 127.75 area by that previous range high that we had seen a breakout from back in April. The 27.75 range high had been capping gains for several months after the market had put in a plus 30-year low in October of 2016 at 118.40, and so the breakout that we did see in April above 27.75 has forced a potential bullish structural shift. And so if we do see setbacks over the coming sessions, they should be very well supported around 127.75 ahead of a continuation of gains eventually up above 32.68, that recent high, and towards the next extension, measured move extension objective at 135. Ultimately, only back below 25.90 would compromise the newly adopted constructive outlook for cable. Dollar yen. So dollar yen looks to be in the process of extending declines for a retest of the 2017 low, which comes in just ahead of 108. At this point, if we see the market establish a weekly close below the 2017 low, which is at 108.13, that would suggest that the market could be then poised for a deeper acceleration to the downside. But overall, we have been seeing a range trade for the most part over the past several months. And so this setback that we've seen after the market stalled out by the range highs up above 114 could once again be supported somewhere down in the 108s. But right now, the focus is on a retest of the 2017 low, which comes in at 108.13. Euro Swiss. So Euro Swiss has been in the process of correcting off of a fresh 2017 high, also the highest level that this market has been at since the January 2015 collapse in Euro Swiss. The market traded up to as high as 115.39 ahead of this latest pullback. If we do see setbacks extend over the coming sessions, which is quite possible, look for the market to find some support by that previous breakout range at 112. And really, there's a lot of good support in a previous resistance turn support range between 110 and 112. So look for these setbacks to be supported in favor of a higher low and an eventual continuation of gains in this market back above those 2017 highs at 115.39 and towards 120 further up. Really, at this point, only back below the 109 handle would give reason for pause. Aussie dollar. So Aussie continues to extend its declines since the market topped out the other week at a 2017 and plus 2-year high above 80, and there is risk for these setbacks to now accelerate potentially back down into the 76 to 77 area before even considering the possibility of a higher low. Again, the pressure is now on the downside. The market has been correcting off those recent 2017 highs, and there is risk for a drop down towards the 76 to 77 area. Dollar CAD. Dollar CAD has been in the process of correcting higher since putting in a plus 2-year low, a 2017 low, and a plus 2-year low just ahead of 124. There is risk now for this continuation of this correction back towards the 130 area and certainly towards a retest of 29.40, which is the 38.2 Fib retracement off of the 2017 high to 2017 low move. Kiwi dollar. So Kiwi setbacks have been quite intense over the past several days since the market topped out by a 2017 and plus 2-year high above 75. And there is risk from here for additional declines towards next key support, which comes in around 72. At this point, only back above the 75 area would put the pressure back on the top side. SPX 500. The S&P 500 has finally shown some form of a pullback after this market has been trading in an intense uptrend over the past several years. A short-term pullback just now, but the market was able to break down below some key support on a short-term basis at 2358, and this sets the stage for a potential acceleration of declines back down towards what is now critical support at 2400. A break and close below 2400 would do a good job of suggesting that the market is putting in a more significant top and a potential bearish structural shift is in play. Right now, the break below 2358 has taken the immediate pressure off the top side, but again, a break and close below 2400 would be required to potentially mark a shift in the structure, a bearish shift in the structure. Gold. So gold has been trading up this week, and the latest break back above 1275 confirms a higher low at 1255 and sets the stage for a retest and break of the 2017 high, which comes in at 1296. A push above that level would open an eventual retest of the 2016 peak at 1375 further up. Any setbacks that we do see now should be well supported, ideally ahead of that recent low that we saw around 1250.